Okay, so the key question for us today and tomorrow is that what determines the fundamental value of an asset? Before we are going or digging into companies and multinational companies with multiple foreign exchanges, at first we have to understand that, okay, if we have any kind of an asset, or for a simple case, when we have a land, an agricultural land where we can collect some rental fees and that's all. We don't have to do any kind of an investment. We know that a land doesn't have any depreciation, in most of the cases if it's not removed by a landslide or something like this. So we just have the inflow of rents, and the first question is that we can assume that this rent is a flat rate, so it doesn't change at all. The next thing is the time frame. So usually we can make contracts for 5 years, 10 years at most. Obviously, a land is not expiring, so it's not like a building that after maybe 30 years we need some kind of a refurbishment, or after 60 years maybe we should build a new one. Since it doesn't have much depreciation until the soil is not ruined somehow, it could go to infinity, just somehow. Still, if we are individual investors, somehow we have to limit this. So that's why it can be much easier to say that, okay, we are looking forward for 30 years and after that we are stop this. Obviously, if you are just saying that, oh, let's sum up the revenues from this rent, that would be quite stupid because we don't care about inflation. So obviously, this is a flat rate, then the value, how many services and products can be purchased from this rental fee will decrease as prices are increasing otherwise on the market. So we need compensation for that. And also, if I'm making the contract today that, okay, I will give this company this rent to use and to raise crops on this one, then still the present value of the 30th year revenue is not the same like today's, because I have to wait 30 years until I can get this. So obviously, in corporate finance, we learned that, okay, we should calculate the present value. So we should pick some kind of an interest rate, and it should be fixed, or a discount rate if we are using sophisticated words here. And based on this one, then we can, do we have a mouse cursor? Yes. So with this interest rate and also with the time frame in the exponents, then we can calibrate this one way better. The question is, which interest rate should we use? Right now, in a really strange or fortunate situation that 3 years ago, finally when I purchased my flat with my wife, we were able to make a contract with fixed interest rates for 25 years ahead. So in the far future, but after that it determined my interest rate or discount rate for any other assets, because I can keep the asset until it can generate higher revenues, or positive revenues after discounting them with this fixed interest rate, because I have to pay 5.25%. So until government bonds are paying more, until rent on a land can pay more, then this is an added value for them. And once they are not able to provide such a revenue, then I have to sell them and pay back some part of the loan, or maybe the entire capital of the loan, because now it doesn't provide me any kind of an additional benefit. So this is also what we should consider when we are thinking about investments that asset side, so all the assets should cover at least the costs of the equity and also the cost of the debt. If they are not able to do that, then we should close down the company or the business and whatever. So this is the core of this, that revenues and the present values of the revenues, we should be careful of them. Once we can determine this if we have any kind of a fixed interest rate. So at the end of the day, we can create an annuity. So annuity is a stream of finite cash flows, where the cash flows are constant, and then we can just, if we are summing this thing up, and then the same equation is there, just in a nice and elegant way that, okay, now we have rent in that. But obviously, we still need compensation against inflation. And so that's why some kind of a growth rate is always built in. So somehow I inherited land from my grandparents near Orosháza, which is a small town 52 kilometers from Szeged. And somewhere in the area there is some plot of a land which is utilized by the local farm, and they are just renting it. So in their contract it was for 5 years, but in the contract it was that for each year they are increasing the rental fee by the official inflation from the last year. So in this case, this is really simple. Sometimes also we can see contracts like this when they are fixing the rental fee to the price of the corn or other crops, but they can raise there. For me, it's very simple because now we have these huge droughts, and sometimes they cannot harvest anything variable. So as an investor, for me, the flat rent rate is much better. But also we can say that if this is not a land, if this is a house, and if you are thinking about the housing prices or the crisis of the housing prices, so when I purchased my beautiful flat, I was thinking already that, okay, so it was completely rubbish. So we were buying concrete walls. It's a nice 80 square meters, so it's really good. It's an optimal place because Tesco, Aldi, Lidl, Tram, Blood Lake, everything is there. Perfectly, exactly 3 kilometers from the faculty. So I was hoping that was my dream place. But otherwise, we were just buying concrete walls. So we had to tear down all the wiring and change. We had 1.5 beautiful months to renovate everything, because after that we had to move in. But we were able to do that. But already this rubbish was cost us 30 million Hungarian forints, and I was saying that, okay, this is the price. So, but the problem is that already at that time, if you are doing the math here, so if I'm not living here but using it as a rented apartment, I'm collecting rental fees with as an annuity which is growing by rate of G. It was already really hard to justify such a price. And if you are checking rental fees nowadays, there is a huge and growing gap between the rental fees, the present value of foreseeable future rental fees, and asset price or real estate prices. In Szeged, in Budapest, in Europe, anywhere, or in US and elsewhere. So right now we are in a stage, or 1.5 decade long stage of real estate bubble since 2008, because interest rates were really low, many people moved away from stock markets, and real estate seems to be an okay investment. Just the problem is that it's always a huge exclamation mark when you find an asset and you cannot justify the asset's value based on the present value of the cash flow which can be generated. So one of my friends told me that, yeah, right now the pricing on real estate market is not like a cash generating asset. It's like art piece or piece of art. So we cannot provide cash revenues for a statue or for a painting. But this means that maybe a painting has some, it doesn't have an interesting value, it has some kind of an emotional value, and that's all. So this is always a huge sign that we are in a state of a bubble, but obviously we don't know when it will burst or how it will burst, just it's a warning that, yeah. So I bought this rubbish flat for 30 million or 31. Now the same thing is for people trying to sell similar things in the similar environment for 40 million. Come on guys, no way. Okay, someone will buy it, just the problem is that this is absolutely not sustainable. That you cannot collect enough revenues from renting this thing out, or you have to define such a growth rate that it was also exponential. We tried to model this with other friends, and it was always a disaster. So as an economist, we can say that it will be really interesting what will happen in the near or far future as well. Yeah, so if we are focusing on the rental fee of $100 US, then obviously if you would just sum this up, we would have 3,000, which is nonsense. Obviously, if we are calculating the present value, it will be much more nicer because far future revenues will be discounted down by the present value so much that they will lose their relevance. You can ask the question that, okay, but the main problem with houses or real estate is that you need regular refurbishment. So I had to change, okay, wiring, maybe it can be operational for 30 years even. So it's copper wiring, not aluminum, so it's not melting away due to excessive heat. But even if I changed all the doors, windows, and so on, their lifespan is somewhere between 20 to 30 years. So after that, you have to change it. Tubing, same thing. So the problem is that still you have to factor in that you're not just collecting revenues as a tenant, but also you have to reinvest it somehow. Not just painting it regular or frequently, but it will require further takes. So if you are adding just some growth rates, then obviously, because we are increasing the rent, then that's why we can increase the present value. So this is how we can try to model what is happening here if we are trying to model the expectations about revenues. Yeah. The problem is that, another application for this one is on the bond market. Yes.
So the growth rate is said it was fixed, which is determined by.
Somehow this is completely arbitrary. So this is determined by the balance sheet, the liabilities of the company, of you, or sometimes people are just taking government bond yields and then using it as a factor for calculating. Or I think the most simplest way is to check that on the market, usually we can find fixed interest loans. At least the interest rate is fixed for 5 years. That's the usual term. And in this case, we can use this interest rate as a benchmark.
And you were saying the growth rate is used to compensate.
Yes.
So meaning it will never be greater than the interest rate. Or is there a case where it becomes...
so the growth rate... Oops. So the growth rate can be smaller. So in this case, I'm using growth rate of 3%. And since inflation target is usually 3% at the central banks, at least in Hungary, or 2% in the ECB. So in this case, I'm just compensating for inflation. It can be higher and higher, so obviously we can set up different circumstances, but this is a conservative approach. So with bonds, we can do the same thing, and we should do the same thing. So next semester at risk management, we will see that what happens with the bond portfolio if interest rates are changing. Even if I have PhD in finance, mostly I hate bonds because they are always selling you the idea that, oh, the bond investment is safe because all these shady companies are doing something and maybe they are defaulting at the end of the day, but bonds are stable. The problem is that, no, bonds are absolutely exposed on this problem what you mentioned before, that we have some interest rates here. But if we are saying that we are using the 1 year interbank interest rate to discount the value of cash flow, so first year's interest payment, and second year's interest payment, what we can see here. So we have 10% of interest payment for the first year, for the capital here, then the second year, then in the 30th year, they will repay also the capital as well, so that's why it's multiplied 1.1, because capital and also the interest is repaid here. But the problem is that obviously monetary policy should react on inflation, so consumer prices, and that's why interest rate will react, or in this case, in our case, the discount rate will react as well. So that's why prices, because at the end of the day, if we are summing this thing together, this should be the theoretical price for this. But this price is completely the subject of the discount rate. So if we are moving it, if it increases, then it means that the price of this bond will decrease. If we are decreasing the interest rate or the discount rate, then it means that the price of the bond will increase. So this is a really common investor or investment strategy, that if we can see that inflation is rising, we should move out from government bonds, especially from long-term ones, because they are absolutely sensitive to all these things. So you should run into discount bonds, you should go into bank deposits, doesn't matter. So something which is not affected by this behavior. And after that, we can see that as inflation increases, and also as central banks are increases their interest rate, which will go through the transition mechanism, then we can see that long-term bond prices and also medium-term bond prices will decrease. That's why we can see that many mutual funds, which are absolutely bond-oriented mutual funds, value was decreasing also during 2022. That was the peak in many cases. But after that, once it's cheap, so as an economist, you should always buy things when they are cheap. Not just running shoes. Okay, that was not that cheap. I'm a terrible investor in this case, because I'm always going to buy shoes when I need them. So never when there is any kind of a discount or whatever. So yeah, I'm teaching stuff, but sometimes I should sit in my classes and remember, not just talking. So in this case, when we can see that now inflation has peaked. In this case, you should run in to the bond markets, so to remove your money from the bank deposit or from the short-term bonds and move into long-term ones. Because after that, you will not just enjoy that already interest rates, so interest rate payments here will increase because also interest payments will be higher. It can be a fixed interest payment bond or it can be a variable interest payment bond, doesn't matter. Interest payments will be nice and juicy, but also the prices will increase now on the bond market. So you can win both on the interest revenues and both on the revaluation of the bond portfolio. So, and after that, every mutual fund will be announcing happily that now we have huge profitability and so on, and the returns are really high. Yeah, just this is a once in a decade situation, hopefully, that what they were able to achieve, and it's a completely natural phenomenon. So it was nothing to do with their wise portfolio managers or whatever. So with bonds, we had this sensitivity for the discount rate and also for the interest rate. Yeah, so this is how it looks like, that we have annuity for the interest payments during the whole lifespan of the asset, and also we have the capital repayment at the end of the lifespan. So obviously, capital repayment for long-term bonds for 30 years, it doesn't matter much, or doesn't have much contribution to the value of the bond, but if it's just for 1 or 2 or 3 years, then it's obviously much more relevant. Or me as a small retail household investor, practically I don't care about capital repayment at all, because I will keep everything until maturity, until expiration. So I'm just focusing on to maximize the interests. Is it good for me to have fixed interest, or is it good for me to have variable interest? Right now, both of them are good for me, so I absolutely have no idea that inflation will stabilize here or go down or go up in case of the Hungarian forint. So that's why it's much better to have a 50-50 portfolio or something like this. Yeah. Okay, but what happens if we would like to make our corn? Instead of renting this land out, now we have obviously in a much more difficult situation, because we have revenues, we have expenditures, we have depreciation of the asset, which will generate the revenues. So we have the quantity of the corn, we have the price of the corn. Obviously, we have to buy the seeds, so the seed price as an expenditure, and also once we harvested the still we can decide that do we want to sell it right now, or can we store it and sell it later when it's more expensive. So this will determine the revenues and also expenditure. We have machinery, maintenance, irrigation, fuel, fertilizer, land rental fee if we are renting it. What is missing? Wages, nice. And also we have the depreciation. We know that that one is tricky because it's an artificial thing. So we don't have to pay anything. So it doesn't relate it to cash flow. It's an accounting thing which will reduce our profitability, and that's why it will reduce the capital income tax. So it's a tax reduction vehicle. This is not a real expenditure for us, but still it's considered as that one, so that's why I removed it. So for us, the operational profit is always the EBITDA, so earnings before interest, taxes, depreciation, and amortization, because this will determine the margin of our operations. This margin must be positive, at least on medium run. Definitely on long run, maybe short run when we are running in the first or 2 investment years, or we have poor harvest, we can do it, but if it happens regularly, then obviously we have issues. So, and this margin is changing in time, it's highly flexible, so that's why companies are always pressured to increase their productivity. It's always a bad sign when we can see that productivity is not increasing in the economy, because it means that they are more sensitive against external shock, or they became more sensitive against external shocks or exogenous shocks, and also some of them will close down, and the whole industry will be much more concentrated. So the problem is that if the cake is not growing, then usually people start to make bigger slices. So the big challenge is the economics of scale. Okay, not this one. Yes. Can I go back? No? Okay, yeah. So how can we achieve this? At first, scaling up the customer base. Okay, in the case of corn, that would be really hard. But if we are another, so not an agricultural company, but something else in the industry or in the service sector, what we need? Customers. Okay, if we are looking on some tech pros and we work, then they were not dealing with this one. So if you are taking money from SoftBank and other private equities, they will give you happily some $billion US, and after that they will see that what happens with their investment. But for the rest of the investors, we are really interested. We are really interested in the growth and the reliability of the customer base, because it's really nice if we have a niche product, but if only 1 or 2 customers are using it and not that frequently, then we are in trouble. Also, it's really nice to be unique. I mean, if we are able to find our market niche, then we can have our monopoly. So, it's always funny when people are talking about hardware. I mean, IT hardware manufacturing, so graphics card, processors, RAMs, and so on. So, all the components which are required in computing, but margins there, because mostly this is a competitive market, they are really narrow. So in this case, Intel or TSMC or other big fabs and manufacturers are forced to have huge quantities and huge yields. So not just huge quantities, but also the amount of bad products should be really small. So huge yields must be achieved, and they are highly pressurized, and also that's why we have really huge factories as well, because again, of economics of scale. But if you are manufacturing the machines what they are using, so all these lithography machines, UV machines, all these things where they can deposit the metals and other molecules on the silicon, or sketching the parts of the chips, then these manufacturers have way better profitability. Or, for example, all the fluids and chemicals which are used during this etching process is manufactured only by 3 companies globally. So they are the real nice money-making machines. So if you are looking for investment, manufacturing is a nice place, but you should find the manufacturer for the manufacturer. So we need unique products, unique services where we are the price makers. Because if you are just in a generic competitive market, then the problem is that in this case we are forced to have huge economics of scale, and if someone is coming up with a better product, and they can even have way bigger customer base, or they can cut down their costs much more, or if they can increase their yields, then the problem will be that suddenly our assets will lose their value. So it's much more comfortable to be in the first category in terms of core competence. So this is what we have to understand when we are thinking about strategy or anything like this, that how can we identify this niche territories, because until it's monopoly, oligopoly, then it's perfect. But modularization is an interesting field. So whenever a new area is opening up in the economy. So when computers arrived, everybody was building computers from scratch. So they were manufacturing they doesn't even have chips, or even chips manufacturer were making their own chips, motherboard, and so on, or doesn't even have motherboards. So everybody was just selling huge room-like computers. And during the 70s, that was the first sign that now the industry became much more mature, that modularization started to appear. So some companies only focused on RAMs, because now manufacturing memory was still provided you a nice margin, a nice profit, but it was simple enough, and also the product was standardized enough. So you were able to say that, okay, this memory chip will be compatible with this manufacturer's motherboard, and will be at least compatible with this kind of platform, because at that time there were multiple platforms, not just PC, but also other, like Commodore and Amiga and other platforms were there, which were dying out in the early 90s, or until the early 90s, except Apple, they remained. So modularization is always a sign that now things are consolidated, or start to become consolidated when they have standards. Yeah, so in this case we can say that fundamental value can be based on the EBITDA. That if we have a business plan, in this case it should be conservative, so 5 years ahead. Obviously, economists can make up things for 10 years ahead, but come on guys, let's be serious. That we should see 5 years ahead, and we should be really happy if we can do this job during the next 5 years, but we planned ahead. So 5 years at most, and after 5 years we should still evaluate, or at the end of the 5th year we should evaluate the cash reserve, what we were able to form, and also the value of the assets. And also then we can divide it and calculate the present value, and after that, from this rough assumption, we can see that, okay, this is the value of the company. Obviously later it will be more sophisticated, but still we can see that how much money can be earned, and also what are the value of the asset. This is the core idea. And
you were explaining saying when modularization happens, it means things are going up and people are getting stuff and buying and stuff. But then I don't think I got the understanding of what's modularization is.
So modularization means that we have industrial standards, and we can exchange. So not just one company sells the standardized product, but multiple of them. So they are exchangeable. So if I would like to buy a computer memory, then I can buy from different manufacturers, from Samsung, I can buy it from SK High something, or from Chinese or US manufacturers. But still there is one US manufacturer. So, and all of them will be compatible. And also they will be close enough or doing the job. So the problem is when the market is so narrow that one company should manufacture everything from scratch. Then all their products will be practically unique, and it will be absolutely expensive. So this is always a circular problem, that until it's expensive, nobody would like to buy this. But also this is against for market development and to scale up activities. So other example. So we know nuclear power plants are expensive. So they are really good for providing steady electricity. So 1/3 of Hungarian electricity is coming from Paks whenever they are operational. But usually it's really expensive to build this stuff or this kind of things up, because once in a 2 decade or 3 decade, you are building such expensive power plant. And this problem was solved completely in France during the 70s, because they were able to unite planning, manufacturing, financing within one company, that was the GDF. And this was not so related to the government, so politicians were kept away, everybody. From these projects, they were just happy that, okay, power plants were built here and there, because France was suffering from the issue that they did not have any kind of a coal reserve. So that was a huge problem for them during the second industrial revolution, because they had to import everything from abroad. They doesn't have natural gas, oil, so until the 60s they had to import all energy-related commodities and or energy resources. So nuclear power was absolutely crucial for the French industry, because in this case, still you have to import the uranium from Africa. But so, for example, in Hungary, the imported uranium is more processed fuel rods is really small. So once in a month we get a shipment on a train with 2 carriages from Russia, and that's all. And when I was in Czechia, I wanted to visit a coal power plant because it was sexy. And I was always running next to it, and I was always amusing that how big is this one. And they are burning up one. It was so every day there is railway deliveries arriving with a lot of carriages, and they are dropping it there, and that after that they are burning this thing up. So the difference between the mass, what you should move to provide the same amount of output, was absolutely different, and so that's why nuclear energy has its own benefit. Just the problem is that obviously you require so nuclear energy is like difficult or different way to make hot water. So you have to put in the uranium. It should be not much enriched, but still, but it should be obviously isolated from the environment. So containment is necessary. So you should put it in a nice steel bin in the reactor to stay in the reactor core. But after that, you just have to run water around it to keep it cold, and also you have to heat up the water, because it's really funny that we are in atomic age and still we are just generating steam from nuclear energy to just turn blades in a turbine. So that's why it's funny when people are talking about fusion power. Yeah, and with fusion power we would like to still make steam from water. So right now the problem is that the yield from fusion energy and the water's ability to convert it to electricity, there is a huge gap. So you are not just boiling up the water, you are destroying the molecules as well. So there are still gaps in this field, but in the case of France, somehow they were able to organize this during the 70s and 80s, and they were able to build up modular nuclear power plants. So everything was standardized. They were using the same same plans for all the plants, and standardized reactor cores, standardized fuel, standardized safety procedures, standardized software, everything. Standardized wiring. So they don't have to come up with all the new products or the new power plants with new ideas. They just had to build and manufacture. So in this case, this is how they were able to achieve 80% of the electricity is coming from nuclear, and that's why they are not generating much CO2 during this procedure. So that was a nice example for modularization. Yeah, but now let's move forward because time is ticking.